Hello and a warm welcome to my YouTube channel where I cover stocks and derivative data on a daily basis. And now in this video today I've covered Balaji Amines. Now, Balaji Amines is into the manufacturing of specialty chemicals. It has a market cap of 7,000 crores with a return on capital employed of 39%, which is pretty good. It's a very little debt. The company is as good as non-debt free. Promoters hold 53.7% stake. FIIs hold 4.45% stake. Domestic institutions have a very, very small stake of 0.34%, while the public holds 41.5% stake in the company. Now let's have a look at the charts and try to decode what lies ahead for it. Before I get into the charts, let's reminder to anyone who's interested in learning harmonic trading patterns, Ichimoku, multi-time frame analysis, and trading psychology risk management. My courses are there. Details are there in the link given in the description box. There will be from basic to intermediate to advanced studies with lots and lots of examples. And those who go for the trading psychology course get 10 sessions of live one-on-one with me, where we decode ways to further reduce risk and to identify strength and weakness, how to do, which sector is good, which stocks to focus on. And apart from that, a lot of trading discipline is also covered in that. So let's now shoot over to the charts and see Balaji and me. Now here you can see in the charts on a monthly chart right from its listing time back in 2008, and then the low which formed in 2009 out here. Ever since then, the stock has made decent higher lows, another higher low. Then out here also we have another higher low in the stock. Will this be the yet another higher low? Let's try to decode that one by one in it. Before we go further into it, one interesting fact about Balaji Amines is that the stock tends to do a retracement of 60% each time it gets into a correction, and also the corrections tend to be a bit long. In the first correction after its rally from 2009 lasted for 10 months and was at 62% retracement of the full rally. The second correction was a longer one from 2018 February to 2020 March, which was around 26 months odd, with again just a bit more than 62%, not exactly 62, slightly more than that. And once again, from the March 2020 lows to the September 2021 highs, we can see yet another retracement of 62%, and it has come to pause out here. The decline seems to have for now paused out in the month of after the April correction. It went on to correct till April in the monthly chart. So from there we can see yet another scenario. And this time the correction has lasted for 20 months. Now, in the monthly chart, as you know, from a Ichimoku trader's point of view, we can again see something very interesting, that each time the baseline is violated in the monthly, there is a correction in the stock which comes down quite heavily on it. Okay, we can see, and again here we had a violation of the baseline from where the correction continued downwards. We've had quite a few of red candle formations on there. Right now it's trading below the baseline, not only below the baseline, but it has also given a bearish crossover out here. Bearish crossover, which is again not a very great sign from a monthly point of view. However, since the crossover happened due to this sideways movement also, we will keep it with a caution. We won't take it as an extreme bearish view, but something with caution, with an alert that yes, there is one. So we must take levels one by one in case there is a recovery to consider at what stages resistance will form in the stock in case of a bounce. Now let's have a look at the weekly charts of Balaji Amines. In the weekly also we can see, as per Ichimoku, a lot of weakness still no major confirmation for weekly or a monthly trade investor to come into the stock yet. Continues to, even though this month, May month saw a very good candle bounce. Prior to that, April also saw 2 weeks of solid green rally and then a decline. Now that's the part which we can see more clearly in the daily time. Now here in the daily time frame, that large red green candle that we see with a gap down which took place in it could be due to some uh, news in the stock, because this was a gap down out here, and this kind of made a double bottom in the daily time frame. Not just a tick, small hit below that, but quick response back and close above this low out here, which was the important factor of it. So kind of a double bottom scenario after this first rally out here. We can see that there was a rally out here, and we just go and, yeah, let's try to see it like this. You get a better picture. If I take it a bit back, that right from the correction, it started in August 2021, or you could say September 22 out, 22 out here. From this level, this is the first time that the stock managed to give so many green candles and do a decent recovery. Otherwise, the recoveries have been very shallow, extremely shallow recoveries in the stock, and sell-offs have taken place non-stop in it. So this is one, from a short-term perspective, at least a bullish sign from the stock that yes, a pullback happened, and after that we see a counter trending corrective, which is made a double bottom kind of scenario out here. So as per Ichimoku, in the very short term time frame, we could say that this is the I leg, this is the counter trending V leg, and now the stock could take out another I leg to finish an N wave in Ichimoku. Now let's go back and check it via the Ichimoku, that what lies ahead for the stock from here onward for us. Now, if it starts sustaining above 2200, that's a very crucial level for me. I would like to see it trade above 22, 2250, at least get above this Ichimoku cloud out here. Uh, Ideally, I would love to see it trade above this zone, which is 2475. But even if it manages to push its way above the cloud, it would be at least a strong effort of the stock coming out of a correction. What we could then see is the stock do something like this, accumulate, go into a consolidation, and then again try to push it way up from here onwards like that. Now let's have a look at the weekly ones to further garner that if the stock starts trading above 22, 25, 2250, where can we see the stock go up to from here? So once it pushes its way above that, 2375 is a big hurdle, 2375 odd level, where again it could see some, like I said, if it goes up, it will do some consolidation. That 2300, 2350 will try to stop the move out there. Once it takes that out, either in a one-way move or with some consolidation, the next major resistance for the stock comes straight away at 2750. We can see a lot of consolidation took place in this zone before it broke down. Attempt number one, attempt number two, attempt number three, and then it broke down. So this particular level now, 2750, 2800, is that bigger headache for the stock, where it will not be easy for it to break above these levels, this 27, 2800. So above 2375 odd, that would be my next resistance in it. And the bigger one, which is again something which will be a key factor, whether this long correction in the stock, which has been happening, was done with, and now we start a big rally again, will only happen if the stock can sustain above 3,800. 3,800 outlook. So the levels to watch out for the stock in the immediate short term would be 2250, then 2375, then 27, 2,800, and then the bigger one at 3,800, which is a huge resistance of 3,800. Once it, if it is able to sustain above that, which is almost near 75% upside from the current price value, then we can say yes, the stock is into a huge uptrend. In the medium to long term, it will be superb. So from a short to medium term, these would be the upside levels I would be looking at in the stock. Now, what is the double bottom which we are calculating at the current moment and accepting out here, which took place in the daily time frame? It fails to hold. There is some selling pressure which comes and it pulls it down. In that case, the next major support comes in at 1,550. There's no major support before that. 1,550 is where it could try to pause this move and again take an attempt to turn from there. And then only, it would be able to move. That's a monthly cloud, but it's a very, very thin cloud. It has, it take a huge effort, lot of institutional buying and a lot of good news from the company to do it. Because if it fails to hold 1,550, then there is something seriously wrong with the company, which is gone into a downtrend. If that is to violate, then we would be looking at something like 800 to 700. So the caution in the stock is extreme caution would be below 1,550. Otherwise, also in the short term, one should be very careful below 1,875, where it made a kind of a double bottom formation. So two very clear levels need to be watched from a risk management point of view. Upside also, I suggested where the stock will come to a resistance. Now, let's presuming that the stock has bottomed out, or let's say it will bottom out near 1,500 or 1,600. And if we go by again, because history repeats itself, what I noticed in the stock was that every rally the stock does after a correction is 6.6 times with 6.6 times with Fibonacci extension. Okay, each one from here, from here, it does that. So if it is going, if we go by that theory that yes, the company is extremely sound, going to do very well, and the sector, especially the chemical specialty sector, you've got a strong upside. It's continuously going to do much better than what it has already done. This is just the start of a big run. If we go by that concept, then the next, approx 6 times for the stock is near 30,000. But that's something we are talking about a very long-term perspective, provided a lot of factors will come into play for that to happen. But one can think of those only if it starts sustaining above, probably above 3,800, then only we should start thinking that yes, because of its past performance, and if the industry cycle continues to be good and the stock continues to be a rank outperformer among its peers, then yes. But please remember, for such kind of major performances in stock, time is a huge factor, and you will see that each rally of it lasted for a longer time. So that was 53 months, the first one. The second one is pretty fast out here, which was only 19 months, say 17 months or so. It's very natural that if you want a much longer compounding growth in your investments, then you need to hold for a longer period. There's no Einstein theory behind it or rocket science. But yes, the stock can do it, provided we keep a horizon like that, and most importantly, keep the levels in mind before we take a call on a stock. You should keep reviewing the stock regularly. Of course, as a investor for such a long period, you might look at it only in the weekly, monthly prospect and not in the lower time frames of daily and much lower than that from that point of view. Please do not consider this as a trading or investing advice. Please do your research thoroughly. This is just an educational video based on technical analysis using Ichimoku and Fibonacci. Please do your study before taking a call on it. I hope this video is of help to you, and please don't forget to like it, uh, subscribe to the channel and share the video as well. Until then, happy investing.